Broadcast is now starting. All attendees are in listen-only mode.
Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who hope it grow. John Reosti, back to back, Fridays and Mondays. Double duty.
Yeah.
Hey, John, thank you very much for joining us. Lance is still out. And so it's you and I following up on Friday. I don't want to redo Friday's show. It's on the video. We talked about that. But you did follow up with an article on it. And what was on any feedback, anything is, I guess the question is this just another Washington blip that will come and go, or is this portend something more serious down the line?
No, I think, as I said, Friday, we have to, I want to, and I'm sure others do too, dig into the report to see why SBA is taking what seems to be an outlying position on the level of fraud in the programs. Just everything I've read and seen and heard, and from people that I've talked to, just seems to indicate a significant amount of fraud, and that the consensus number is probably much closer to what the OIG is estimating than what SBA is estimating. And so, they did talk about it. There's some interesting points raised in that they did a sort of a loan by loan review of millions of loans, and they just see the incidence of fraud as substantially lower than everybody else, and they were there. It's I remember one thing that the Inspector General Ware said in the hearing. He was in the middle of the fight. Well, SBA was in the middle of PPP, so
Yeah.
you have to perhaps scratch your head at this, but you have to really take an in-depth look and an open-eyed look, and you can't simply discount it because it's sort of different from everything else you've been hearing.
And John, you made a great point, because there are political differences, and as you said, passionate fights. That doesn't change the underlying report. SB is standing by the report. They're not backing off on the report. Just because they didn't show up doesn't mean the report is invalid. They chose not to defend it, but that doesn't mean that it's not right.
Right. Well, I did get a chance, to include some comment from SBA that they were very good enough to email me in that story. And one of the things they pointed out was, when you tabulate the amount of lenders who, number one, have paid all or at least some of their loan back, and you add that to the people who are in deferment, so they still don't have to pay anything yet, you get 88% of the borrowers. And they say it's hard to reconcile that level of fraud with 12% of the borrower base, that meaning $200 billion of fraud.
Well, I certainly am looking forward to seeing what you have to say on that in the future. We're going to look into it as well. But it's fun to cover Washington, as it's fun to see the sausage being made and being.
There's another quick point I want to make is that point that SBA made. They didn't make it only to me. They made it in their report back on June 28th also, and it was mentioned by I think it was Representative Velasquez, but it was mentioned by one of the representatives who was questioning Inspector General Ware, and he was aware of it too, and he talked about it. And one thing he said was, as the public profile of PPP fraud rose, as there were more and more reports of people going to jail and people suffering consequences, there was an uptick in payments, and a lot of people who may have committed fraud or done something slightly shady opened their checkbooks and wrote checks. And that raises an interesting question, if in the end they paid everybody back. Well, I guess there is potential fraud. There is implications to the government because they had to pay out on these loans and fees and other things. But it lessens the
They
impact.
still, they still committed the fraud. They're still
Yeah.
guilty of fraud. Perhaps the penalty won't be as extensive since they made full restitution, but the fraud is the fraud.
So that was the way he answered the SBA point about.
But they paid it back, which is interesting.
Yeah.
Hey, let's shift topics. John, we are in a record-breaking year for 7A. What's the number going to come in at when we finish in 2.5 months of fiscal year 23? Wow.
It's tough for me, and maybe you'd be better, and the listeners would be better to do this, because I don't have the years of numbers, and for quite frankly the modeling capability. But everything I've heard is that the last quarter of the year, the fiscal year, which I guess is what we're in right now, July, August, and September, is the busiest, and really the last few months and few weeks of the year, things reach a fever pitch. I remember back in 2015 when the program shut down. It was July, right around this time, when it shut down. So things, obviously, there's no hint of a shutdown now, and I don't mean to imply that, but obviously the last quarter is going to be big. The numbers already are big, so when you factor that in, I think it's clear that there's going to be more than about $26 billion of loans, which is, I believe, the record, right around $26 billion, and that was set. Well, that's not true. There was the last year when when they had the COVID issues, or fiscal 2021. In a normal year, I should say, the record is about $26 billion of lending.
My question, industry question is, Lance's question is, but what about the quality of this credit? Given the current economic situation that we're in, what is your perception of credit quality?
I think that is going to be an issue, and there was a bank reported on Friday, and I was I didn't. We haven't covered this bank yet.
Look at that! Way to go, Joseph. Look at
that. Okay. Well, you can see this is as of 7/16. So right as of yesterday, I guess, and we're talking about $20 billion. So it seems very likely that in the last quarter of the year, there's going to be enough to push that up.
Yeah. Go ahead.
I was going to say, a couple banks reported, and they said something interesting. One is a bank that, as far as I can tell, isn't an SBA lender or a big SBA lender, but the CEO made a point that certainly pertains to SBA. He said this is a bank, it's Washington Federal in Washington State. They had a long string of years where they had no net charge-offs, and they only had recoveries from, I guess, the financial crisis era. So they went years where they were recovering bad loans from prior years, and now all of a sudden they've had 2 consecutive quarters of modest charge-offs. And I want to hasten to state that overall their asset quality is excellent. They are, I think, if I remember from the report, only about 0.3% of their loans measured against total assets are delinquent. So this is
that's very impressive. Yes,
always had good credit quality and continues to have good credit quality, but this long string of net recoveries is over, and now they've had 2 consecutive quarters of charge-off, modest, but still it's a big change, and obviously he points to interest rates, and every time interest rates go up, it just it impacts credit quality, because borrowers who were certainly able to repay their debt, last year when when the interest rates were much lower, are now struggling, and that's going to impact SBA. And that was seen at Unity. The same sort of credit situation. Unity is based in New Jersey, and they had sort of the same profile. They're a very solidly performing bank. They don't historically have any credit quality problems. They don't have current credit quality problems, but they did see an uptick in non-performing loans, and that did include some of their SBA loans because they are a bigger SBA lender.
What is the sense in these? I know you cover earnings calls very extensively. What is the sense from these calls? Again, is this the blip, and this is this predicting future higher increases and defaults, or hey, it is what it is and it's manageable? Where do you see this falling?
I think people are saying right now things are manageable. This quarter, when all of the earnings play out, and next week will be a really big week, and then there'll be, the week after that they'll sort of tail off and finish up. So we'll have a fuller report in early August. But I think what you're seeing is that credit quality, number one, is still manageable. Number two is it's still on a historic level, it's still good. The numbers are below where they've been historically, but the word that you keep hearing again and again, and the bank that I covered on Friday was Citibank, and they use this word again, is normalization. Now, in their context, they're not a big SBA lender, but they are a big credit card lender. And what they said was, while their credit card issues, delinquencies, and charge-offs are still below historical averages, they expect that they will reach the historical average by the end of the year.
Is anybody citing their SBA portfolio as a problem? I know we go back to the great line by the Bank of America CEO in 2008 that their small business loan portfolio was, quote, a damn disaster. We're certainly not there,
No.
but is anybody citing SBA credit deterioration as an issue? I haven't heard it. Have you heard it?
No. And when I mentioned Unity, they were talking about, they're not at all likening it to a disaster, just an uptick in problem loans, and that included SBA loans. That included SBA. They didn't specifically say 7A, as I recall. I'm going to assume it's 7A, but I could be wrong. But and the reason I cite them and nobody else is because they're one of the early banks to report. So unfortunately, they stand out in that respect.
Well, this would have been a conversation near and dear to Lance's heart. That's what he preaches, servicing. And the takeaway is people are saying, hey, there are issues, but we believe it's normalization. I like the word. I'm gonna have to look that one up.
Right, and it's funny you mentioned Bank of America in 2008. No one is forecasting that. Everyone is, to go back to Citibank again, their scenario calls for a mild recession, and in a mild recession, you're going to see more problem loans and uptick, but hopefully not anything approaching what was seen.
No, and no one's predicting that. We don't want to go there again, but there are always. This is not where it was pre-pandemic, where we had very robust, for the lender, good stats for their small business loan portfolio. There are cracks, there are indications, there are problems. And I think what that is, that's the cue of stay on top of it and manage the process as best as you can. There are going to be problems, identify your problems, call it what it is, and move on.
It did, though, bring to mind as I was reading the comment that the Washington Federal CEO made about interest rates. It did bring to mind not the mid 2000s, but sort of the early 1980s, and I was a schoolboy in the early 1980s, so I wasn't thinking about banks and other things. But later, I read a book called Secrets of the Temple about, and that's a very ominous and conspiratorial sounding report.
It's a great title.
But it was by a Washington Post reporter who covered the Federal Reserve those years, and Paul Volcker was the chairman, and the years of 18 and 20% interest rates and the impact that had on the economy. I don't think we're heading to 18 and 20%. I don't want to say this is apples to apples, but more importantly, or more to the point, it talked about the impact of these rising rates and their impact on what otherwise would be a very, what last year was a very solid and viable business. it's less so this year.
Yeah, yeah. But as always, we need to be in the moment. We need to understand where we are. Interest rates are up. Recessionary. I don't know if we're in a recession. People are saying that, but if it is, the consensus is going to be mild. There are niches that are very huge problems, retail, certain geographic areas, San Francisco. So it's always, it's important to be on top of this and know what you're doing. John, I always appreciate your comments. Real quick, hey, Joseph, do you have the slide on the SOPs? These are all up on Amazon now. Show the new covers. There we go. We redid the cover. You may want to hold off on this one. In fact, you may want to hold off on that because there's going to be a technical update that we're going to get in a couple of weeks. This one is good, the 5057. That one's ready for order, and also the new 5056. So those are all on Amazon. They're hardcover, which makes it a little bit nicer from that. John, again, thank you so much, and thank you all for joining us, and thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.